Welcome back, Lattes. Thank you again for joining me on this cafe au lait tier for this video. I'm going to do part 2 of the CPI video that I did a few weeks ago. I procrastinated, just didn't get on it. So here I am. I want to talk more about consumer price index and what it means to trade. It's one of the more important ones for sure. And so my plan here is to keep it shorter, but to show you something, tell you something, and then get on the charts and show you some more, and then we'll be done. So let's get over to Forex Factory. I just want to show you a couple things. Okay, here we are at Forex Factory, and I took my face off because I don't like to see it bobbing around as I'm looking elsewhere on the screen instead of at the camera. It drives me nuts. So I took my face off for now. So CPI, if you remember from the previous video, I spoke about CPI, which stands for Consumer Price Index. And it's a method used by the US Bureau of Labor Statistics, and it tracks inflation. How are we doing? How are we with prices versus what we're paying for things? So it tracks and measures the average change in prices of things that we pay for, like goods and services. Things we buy, tangible things and non-tangible things. What are we paying for those things? Are we buying more? Are we buying less? And that's what this data tells us. And I stated before that this is old data and it's a month behind. Okay, and I use the analogy, I'm looking at the camera like you can see me. I use the analogy that you can't measure a puddle until it rains. Okay, we can't bring the data to you until it's in the past, until it already happened. So the numbers that come out every month is old data. Okay, and you can see right, where is it? Oh, sorry. So you can see mid-month, like the second week of every month. So coming up in September, the CPI numbers come out and they're flagged as red folders because they will move the market. It's important data, like I said. Comes out every second week. It looks like the 15th, the 18th, the 16th. I was like going back last night to look to say, when does this data come out? The second week every month. So now you know. And the really cool thing about all this data that's presented, GDP, how are employment numbers? How's the hiring going? How's unemployment? How's the firing going? Like, we want to watch those numbers because that's going to tell us the health of the United States. Are we healthy? Right now, we're not so healthy, but we're pretending to be healthy because we're in a really resilient market right now. And that's another video, but so much money came in during COVID that money is still in circulation. So things like employers and unemployment claims we're still hiring. Like, you can go out and find a different job, but it's starting to get a little bit tougher, okay, to find exactly what you want. So you might be settling, or maybe you're not happy in your job, but you're going to keep your job because like right now with the state of the economy, that's the best thing to do. So if you're not quitting your job, then there's not a job available for me. So people are holding on to the jobs. There's less jobs, but there are some jobs out there. And that's just an example of the yin and yang of things. So CPI is pretty important, but what the US government, the federal government looks at tippity top is something called PCE. And I'd have to look to see when that comes out, honestly. It'll be another video. I don't know the schedule of PCE, but that's the one that it excludes food and energy data, but it has everything in it. Otherwise, like housing and employment and CPI data in it. So that one is the one that the federal government has their eyes on for sure. And when you hear it on the news, it's a big thing. But so CPI, I consider the second most important. So that's what we're talking about today. And, when that CPI number changes, a lot goes on with trading. So I want to talk about that. I feel like there was something else I wanted to show you. Let's just check out a quick chart here. I want to show you, yeah, I want to show you some other charts. So core CPI is different from CPI. There's one small difference. So core CPI excludes I feel like it's like just the basics. It's the core. It's like here's your spine, and then you have things built out from it, your muscles and all of that. So core CPI excludes food costs, okay? Not just what we're buying at the grocery store, but manufacturing and growing farmers. It includes food and everything that involves with that process. And it also excludes fuel, which we know we saw oil today. Early September, we saw oil really for different global reasons really go to the high side. So when you exclude those two things, that's like a basic core number. And it's really the CPI month to month and the year to year that we are really focusing on. And let's just check out a chart here. Let's go to a graph, I'll call it. So you can see if I unclick forecast, the little gold bar is where things are forecasted. Okay. And, well, that doesn't make any sense if I click off actual, but, you can see that CPI has gone down for the past few months. And well, wouldn't that be a good thing if it's really just a measurement of inflation? Wouldn't that be a good thing? But there's a reason why it's going down so rapidly right here. So what this means, and I think I covered this in the other video, I'm not, maybe I did not. So CPI is really just the past 12 months added up, okay, and then divided by 12, and that's how you're going to get that number. So 12 months of data, but look what happens when inflation is really high, but now we have a brand new month that will be coming up, and we have a brand new, does this say September? Yeah, see, it's blank because it hasn't happened yet. It hasn't rained, so we don't have a puddle. So what's going to happen is this will count as month number 1, 2, 3, 4, 5, 6, 7, 8, 9. That one's negative. 10, 11, 12. So what's going to happen is this bar right here is going to come off. This little tiny bar. So what are the chances that our inflation CPI number is going to go down when we're taking such a small bar, I'll call it, away? We have a better chance in the next few months of CPI inflation rate coming down. And if you saw in the news the past couple of months, oh my gosh, inflation is dropping. Yeah. So knuckleheads, here's why, because we lost these two big bars. We're taking the average, we lost these. So yeah, it's going to come down by a whole percentage point at that point. So these are the things that we need to look at. Okay. These are the things that we need to look at. So you can see this bar, and where I'm actually looking, I'm looking at the blue actual. I'm looking at this number up here. You can see that blue number is floating back and forth. So if I'm on this biggest two bars that just went away, you can see that number is 1%, and then 1.3%. Well, then this month, it didn't move at all, did it? It did not move at all. There was no change. And then it went up a little, then up a lot, and then up a lot, then down, and went negative 0.1, and up and down and up and down and up and down. But what I'm trying to say is when we take off a bar, it's going to affect what's happening here. So the change here this coming month will probably be a tiny bit higher. It will be a tiny bit higher because unless we're down here and we don't make any change, this is still going to come off. Okay. And that's going to change the rate just a little bit. We're not losing a big bar. We're just losing this mediocre little bar. So I wouldn't be surprised if it went up a tiny, tiny bit. And that's what's going to be in the news. Let me get back out of this. So CPI is every month right around this time, and that's what we want to watch. But I wanted to show you one other chart. Actually, let's go to the charts. I want to go back and show you what has happened when CPI numbers have come out. What has happened? Let's go back the last 2 months. When CPI came out, probably this week. Let's see. Let's see if this was the week to here. So this is August 8th. Let's see. So it should be that week. And let's go check CPI numbers. Should be. Where are CPI numbers? Maybe it's the first week. Oh, what happened? Okay. Here we go. Real life happening here, folks. Real life happening here. Let's go to this week. Oh, CPI, where are you? Let's see. Oh, here we go. Oh, so it was just like a little smidgen early. So on Thursday, so this is what I'm going to write down, and we're going to check on the charts. Thursday, August 10th at 8:30 in the morning, nice and early. I am so fortunate that I live on the East Coast. 8:30, those numbers came out, and you can see, so this is the previous number, and this is year to year. So this actually went up a little bit. Okay, inflation went up, and I can show you a chart on that if I can find it. It went up from where it was last year. Okay, but look what month to month did. Look what month to month did in August. Stayed the same. Where's that chart? Right. Oh, so we are in August. Yeah, look what it did. It stayed exactly the same right here. So there was no change in month to month CPI, but it went up because we lost 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So, so we will actually lose this one, I think, tomorrow. So it went, there was no change month to month, but year to year, it went, like I said, it went up a little bit. Just like I said a few minutes ago, went up because we lost that little piece and it didn't change. So that's what we want to check on. And let's go back one more month and see what happened in July. See if we can get the week right. So maybe it's here. July here to here. What happened in July? Here we go. July 12th, 7, 12, 8:30 in the morning. So, yep. So the numbers dropped. Okay, month to month, core dropped. Oh, I'm sorry, the numbers went up. This went up, but year to year dropped a whole, this is a big bar I was talking about, dropped a whole percentage point. What? Cindy, a whole percentage point? Oh, here's the year to year chart. a whole percentage point from July of last year. Where is that? Right here. Well, why is that? Look at that bar. We lost that whole bar. Okay, we lost that whole bar. That's why there was such a shift. Okay, that is really, 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 really cool. We lost a big bar. So, of course, inflation is going to go down. We're no longer dividing 12, but including this big bar. So, it's kind of geeky to analyze the data, but I'm going to get to the trading part. So, this was a big shift on July 12th. So, let's go back. Let's go back and let's hit the charts and see if we can see what happened at 8:30 in the morning on July, I'm going to save July 12th, on July 12th and on August 10th to see how the market reacted to those two moves. I will see you over there. Okay, chickadees, that took me a while to set up because I didn't want to do it with you. I wanted to do it ahead so I could show you. So on July 12th, CPI inflation dropped. Yippee, yippee. So what that means, so now we're looking at two things. And for indices, I'm going to look at the US 30. But we want to go look at the dollar, DXY, the dollar. What happened to the dollar, right? I didn't want to put my line right on it. What happened at the dollar at 8:30? This is an hour chart, but if we could go to the 30-minute chart. What happened to the dollar? For 3 hours straight, and then look what happened for, what is this, a whole day, and then it started to correct itself, but and that consolidated like crazy, right? Look at that, nothing. So inflation went down. That says the federal government, what they're doing is working. Oh, my face isn't here. I like to put my face. I'm looking at the camera. I don't know how to do that from here, but I'm being very expressive for you. Oh, right here. Okay, and did I start recording? Okay, so here's my face because I'm like, so inflation went down. That says the federal government is job. They're doing their job. So we don't have to raise rates. So what happens? The value of the dollar goes down quite a bit here on this day because we don't have to fix inflation. It's dropping by itself because we lost that big bar, right? I showed you that we lost that big bar. Of course, inflation's going to drop. So of course, it looks like inflation is really, really going down, but we have such a resilient market. And the way you see is inflation going down, are your eggs less? Is your steak less? Is your kids' soccer program less? No, nothing's going down. What about that? So the motto is rates up, dollar up. So if the federal government does not need to raise rates this month, the dollar went down. So what does that mean for the indices, primarily US 30? So this is what I was doing on the down low. Oh, that's there. I was like outlining all these charts for you. July, here we go. July, same day. So what happens with indices that they have typically an inverse reaction. So look what happened at 8 o'clock, 8:30 in the morning. Indices went up. I'm just gonna eye measure. 3:30 went up 200 points that day, almost 3. So the indices will have an inverse reaction to the numbers that are coming out to what the dollar is doing. If you can't tell me that, if you don't practice a little bit and look at those things, that you can't tell where the market's going, it's like a secret formula to trading. You wait for those numbers, you know what negative numbers is going to do for the market, and now you know what positive numbers are going to do. So this was the day that inflation went down a whole percentage point, which is unheard of. But let's look at August 10th, where the numbers just went, were a little bit, not like this. So let's go first to the DXY. I just want to make sure, okay, I had to plug in my laptop because I was losing power. It's getting darker in here. Let's go, where are we going? August? Where are we? We're in September? August what? 12th. There we go. August 10th. So numbers did not change. Core CPI previous was 0.2%. They forecasted 0.2%. Actual was 0.2%. Okay. And the same with the monthly. What did change is that inflation went from the previous month in June from 3.0 to 3.2. So it did go a little bit up. So the expectation is that, oh, inflation went up. But we saw what happened with that bar. That's why it went up. This was the month with the little bar that even if we'd made no progress, which we didn't month to month, it stayed the same, right? But that bar came off. So it skewed the numbers because we're just taking the numbers and numbers. If you add up 0.10, 0.12, point whatever, and you add them all up, and then you divide by 12, that's what you're going to get, that number that came out. So it did not change, but that bigger bar came off. So we saw the dollar increase a little bit at that time. So guess what the indices did? Guess what US 30 did on August 10th? Where are we? I'm just going to look for my bubble. No, it's supposed to be the 23rd. There's my bubble. Oh, here we go. August 10th. Look what the indices did, guys. It went the opposite. So if I'm trading the indices, the dollar went up, the indices went down. And if you want to take it to the next level, when the dollar goes up, what does that do? We've talked about this in previous videos. What does it do to the other pairs that you're trading with the US dollar? They're going to have an inverse reaction. If the US dollar is going up and you're buying the US dollar against the yen, if the dollar's going up, you want to be buying this pair. You want to be buying this pair, UCAD. You want to be buying USHEF. You want to be selling the other ones. You want to be selling the euro, the dominant, the major pair. That's not what it's called. I just lost my language there. You want to be selling Euro USD. You want to be selling NZD, the New Zealand. You want to be selling the Aussie dollar. You want to be selling the pound. But these ones with the US in front, you want to be buying. Like, wouldn't that help your trading? Just by knowing these numbers and what they're going to be. Just by knowing these numbers, you guys, and knowing what they're going to be. Is this when CPI comes out next? We did, yeah. When you know these numbers, and this will fill in because this is a whole week away, this forecast will fill in. You can see nothing's here. Obviously, it has to happen. You have to have the rain before you can measure the puddle. And they have to give you a forecast number. So my phone is blowing up. Stop this share. This is what I love. This is why I watch the news every day. Not like I don't leave my house and I'm a hermit, but I have it written down. I have alarms that go off. You can set alarms on your phone. You know, if US 30, if you're like, oh, what I learned from Cindy, it's gonna go down. So set an alarm on your phone. Set a trade. There's a video out there on Espresso, I think. Set a trading view alert, like just before. If you think it's gonna go down to, well, any pair, if you feel it's going to go down here, set your alert right here so you can go, oh, I'm going to watch this and see if it's going to put me in, or set a pending order. So there's so many things that you can do when you understand the numbers, and you don't have to be on the books. You don't have to be in the office. You just have to have it set up. So I hope that helps, and please reach out with any questions. You can book some one-on-one time on my calendar. It's on the platform. And if you're in the cappuccino tier or this tier, you get me here once a week anyway. So ask away, and thank you so much. I hope you found that helpful. See you on the next video.